Hello, welcome back to my YouTube channel. This is Aishwarya. We are seeing Accountancy of class 11 under CBSE syllabus, Chapter 1, Part 4. This is the last part and we'll be covering the following topics. I'll do test your understanding 5. The first 4 are theory based, so you can read the book, watch my previous videos and try to answer them. In case you have any doubts, please let me know in the comment section. So first we'll start with basic terms in accounting. The first term is entity. So what is an entity? So supposing I'm Aishwarya, right? I want to start a business. So just like that I can't sit down and do a business, okay? So I have to see what type of business I want to do. Supposing I want to run a boutique. So I have to name it, okay, and then run the business under that name. Maybe I can name it Aishwarya Fashions and then do all the transaction under the name of Aishwarya Fashions and not my name. Why? Because it is a separate entity. So an organization, it's a separate body, it has independent existence, okay, for accounting, which helps accounting and legal purpose. So any contract the business gets into, it will be Aishwarya Fashions and not me, the person Aishwarya. Okay, so that's why the owner and the business entity are two separate things. So that we learn in detail under accounting entity concept in the next chapter. So the business anyone starts can be anything from the list. Okay, it can be sole proprietorship, a partnership or a company, HUF, trust, it can be anything, but it has a separate legal entity. Then transaction. So from the beginning we've seen all the transactions has to be recorded. Okay, transaction that are measurable has to be, has to find place in the books of accounts. All that I've been saying. So what is transaction? So when money moves from one party to another in the course of business is called transaction. So it can be purchase of goods where money goes out, receipt of money where money comes in, payment to creditors, money goes out, incurring expenses, money goes out. So all the cases you can see money is moving. So it is called transaction. Next, assets. So assets are nothing but the wealth of the business. Okay, so they are of two types, non-current assets and current assets. So if you see the balance sheet of a company, so you can see assets in one column and liabilities in another column. Okay, so the asset will have non-current asset or the long-term asset and current assets, which is the short-term asset. Okay, so first we'll see what is current asset. Any assets which realizes within a year, less than a year. Okay, the benefit of that asset will be within a year. So such assets will form part of current asset. Now if you see current investment, supposing the company is investing in other bonds or other companies for a shorter period of time, so that you will be calling it as current investment. And then inventories. So what are all the inventories the company holds in order to run its business? So supposing I take Aishwarya Fashion, so I'll have all my raw materials which I will exhaust within a year. Okay, so those inventories will come under current asset. Then trade receivables. Supposing I make credit sales, so the customer will pay me after 1 or 2 months, after the sales. So till that they'll come under trade receivables, okay, as current assets. So they're also my debtors. And then cash in cash equivalents. Okay, so cash in hand and cash in bank, everything again are a part of current assets. So cash equivalents. What do you mean by that? So I have something which I can liquidate immediately and turn into cash. So those are called cash equivalents. Okay. Then short-term loans and advances. If the company has lent short-term loans, okay, which they'll get back within a year, That will also form part of current assets. So apart from all these, if there are some other assets which has the same feature, that also can be included under other current assets. Okay. Next comes the non-current assets or the long-term assets. So the first thing we'll see is the fixed asset. So under fixed asset you have the tangible asset. So what do you mean by tangible asset? Any asset that you can physically see, touch, feel. So all those assets are called tangible assets, like your building, furniture, machinery, land. So all these are the wealth of the business that can be physically felt. So what are intangible assets? So there are few assets which you cannot see but they will carry a value in the business. Supposing if I am a pharmaceutical company, I uh, do some research and develop a new drug for a disease. So immediately I will patent my drug. Okay, so this patent will carry a value. So likewise there are copyrights, there are royalties, okay, there are goodwill. All these are tangible assets, which cannot be seen or felt but they carry a value in the business. So supposing I'm acquiring some other company, I'm going and purchasing another running company. So I'll pay them something called goodwill. Okay. Why I pay them? Because it's already a company that is functioning, right? They will have their own customers, they will have a brand, they will have a space in the market. So for all that I pay something called goodwill. So all these are intangible assets. Okay. So then what is capital work in progress? Supposing I undertake some projects for the development of my business which will benefit me for more than a year, and in order to complete it I take more than a year. Supposing I'm constructing a factory, okay, so where the work will definitely take more than a year. So that investments you can show as capital work in progress, where my capital I have been using for some development purpose. Likewise, intangible assets under development. So supposing I have applied for patent or copyright and it takes time for all the process to happen. Till that you can mention the process is under development here. So all these are fixed asset. Then comes non-current investments. Okay. So now what are non-current investments? Investments which take more than a year to mature. Okay. For a long-term purpose you had invested, then it will come under non-current investment. Next comes deferred tax assets. Supposing I calculate my tax liability for the year might come up to 5 lakh. So what I'll do, I have to pay advance tax to the department. Okay, supposing I pay 60% of it as advance tax, which is 3 lakh. So this amount I will show here. Okay, under deferred tax assets net. Then long-term loan and advances. So if a company makes long-term loans or advance payments, long-term advance payments to others, then such amount will also be shown here. Sorry. And if you find any other assets under the same feature, you can add here as non-current assets, other non-current assets. Okay. So where the benefit is more than a year. Okay. So in the balance sheet we have seen the asset side. Now let's see what is liabilities got to do. So again, liabilities. Liabilities means something that the company owes to others. The company has to pay in the future. So they are also of two types, non-current liabilities and current liabilities. So under current liabilities we have short-term borrowings. So if the company has borrowed something for short term, maybe 3 months, 6 months, so that will come under current liability, short-term borrowings. Again, trade payables. If the company has made any credit purchase, so where they pay after a month or two, okay, to the creditors. So they will be the creditors, okay, that will be shown here. Then comes other current liabilities. So in case there are any other current liabilities where the company has to pay within a year, they have to meet within a year, so that you have to mention under current liabilities. And short-term provisions. Supposing the company has expected some expenses or loss to happen, so the company will set aside an amount as provisions. So that amount will also be shown under current liabilities. For example, there is this provision for bad debts. If few debts are there which cannot be recovered from the debtors, so that will be called as bad debts. So the company makes a provision for bad debts, that will come under short term provisions. Likewise, non current liabilities, liabilities where you can settle them even after a year, more than a year. Okay, those are called non current liabilities. So they are long term borrowings. The company has borrowed on a long term basis, so that will come under long term liabilities. And deferred tax liabilities, so there we saw that the tax liability is 5 lakh, of which we have paid 3 lakh, right? So the balance 2 lakh which we are supposed to pay. Okay, this amount we have to mention here as deferred tax liability. We are supposed to pay the net amount. Okay, the difference of these two. Next, other long term liabilities. If there are any other long term liabilities including the capital, has to be mentioned under the liability column of your balance sheet. Likewise, if you are making any long term provisions, that also has to be mentioned here. Now we'll see what is next. Capital. Okay, the next accounting term we'll see will be capital. So what is capital? So when the owner begins a business, he'll bring in money, the initial investment to run the business called capital. Okay, see, used to run and grow a business. So it's not necessary that he has to do only in the beginning of running a business. In the due course also, the owner will introduce capital, or he will raise more capital through various forms. We'll see that later. So that is called the capital of the business, and the company is liable to repay the capital to the owner at the event of winding up. That's why capital is shown in the balance sheet at the liabilities side. Okay, it's a liability for the company. Then what is sales? Proceed from sale of goods or services. So the company will definitely manufacture some goods or services and they will sell it to the customer, right? So whatever you get money out of that sales is nothing but your sales. So the sales may be cash sales or credit sales. So when I make a sale and get the cash immediately, it is called cash sale. When the company does a sale today and the customer pays you after a month or after 10 days, then it is called credit sales. They don't pay you immediately. Such types of sales is called credit sales. Next we'll see what is revenue and expenses. So all the money that comes into the business is called revenue. So when you sell products and services, whatever the company produces, you get money. That is the major revenue of the company. Apart from that, there are other revenues that the company will generate, like commission, interest, dividends, royalties, or if it is letting out something, rent. All these are other forms of income or revenue that a company will receive. And expenses. So all the expenses that a company makes in order to run the business, okay, the cost you pay to run the business is called expenses. So like rent, wages, depreciation, we'll see that later. Then you have salary, interest, all these are expenses. So the difference between the revenue and expenses will show if the company has made profit or loss. Okay. Then we'll see what is profit and gain. Okay. They sound similar, right? But actually they are not. They do carry different meaning when it comes to a organization. Okay. So profit. So if my core business is designing and selling garments, then the profit I make out of that particular activity is called profit. Okay. So in the period, whatever I do, the core business, the money I generate, is called profit. Your income minus expenses. So this profit in the big businesses, it will increase the investments of the owners, because end of the day the investors will look for the profits and they will also want a share in the profits, right? So this profit will be distributed to the investor in the form of dividends. Okay. And then gain. So if I do other activities and I earn a profit out of that, it is called gain. For example, I have invested somewhere and I sell that investments, that profit I earn out of that sale is called gain. Or renting out extra space, or winning a legal case, appreciation of the value of my asset. So all these will be termed as gain and not profit. Okay. Now what is loss? All the if the expenses are more than the income, it is called loss. And if the company loses any money or money's worth under theft or fire accident or any other calamities, that will also be named as loss. And if the company makes loss while selling fixed assets, so here I have made a profit. If I make a profit while selling an asset, it is called gain. Whereas if I make a loss, it is called loss only. Okay. So next we will see what is discount. So discount is of two types, trade discount and cash discount. The discount where a shopkeeper gives at the time of purchase of an thing. Supposing I go to a clothing store and they gave me straight away flat 10% discount. That is called trade discount. So I will pay the balance 90% and come out. Now, in the business, what will happen? Most of the transactions will be on credit basis. I told you, where they will buy a product now and pay for it later. So while paying, whoever the company is selling, it will give some credit period, maybe 2 months or something. Okay. So if the business who has purchased makes prompt payment maybe in a month, so at that time, in order to motivate or encourage such prompt payments, a discount will be given at the time of payment, maybe some 5%, which is called the cash discount. The discount you get for making prompt payments during a credit sales is called cash discount. Okay. Then voucher. So all the transactions will have some evidence underneath. So supposing you purchase the goods for cash, you will have cash memo. If there is a credit purchase, you will have invoice. If you made any payments, you will have a receipt. So when you are entering such transaction, you have to make sure that there is a supporting voucher for it, so that you can go back tomorrow and refer it. So whenever it is required, there is a specimen I have given model under voucher, the various vouchers I have given. You can pause the video and take a look at it. The next term we'll see is what are goods. Okay. If a business makes and sells, whatever a business makes and sells is called goods. It's as simple as that. Supposing I run a boutique business, I design clothing, whatever I stitch and I sell is my good. Okay, then comes drawing. What do you mean by drawing? So the owner invests capital in the business, right? So if the owner wants some money for his or her personal use, he or she will withdraw it from the business. That is called drawing, okay, for the personal use. And then comes purchases. So whatever the business, the company purchases in order to run its business is called purchases. So supposing here in our example, in order to run the boutique business, I will require cloth, I will require threads, I will require various decorative items, buttons, this, that. All that will be a part of my purchases. Again, purchases are of two types, which is credit purchase and cash purchase. Okay, so I buy now, I pay later, it is called credit purchase. If I buy now and pay immediately, it is called cash purchase. Next comes stock. Okay, whatever I purchase and I store in the business in order to run the business is called stock. Okay, it can be raw materials, it can be work in progress, that is my product which is halfway prepared. and then the finished goods which is completely ready for sales. Okay, all these comes under stock. So in this example, this cotton thread is my raw material which will come under stock. The half stitch shirt is a work in progress stock that I have to account for, and a full stitch shirt which is ready for sale will come under finished goods, okay, stock that I have to account. So there will be something called closing stock, okay, that you have to evaluate at the end of the accounting period and then carry forward it as opening stock for the fresh accounting period. Okay, next comes debtors and creditors. So we've been discussing about them, so we'll see that in detail now. So debtors are people or companies who owe you money. They have to pay you in the future. When you make credit sales, they'll be termed as debtors. So you sell to them on credit. Okay, you will receive money on a future date, and where it is shown on the current assets side. Yes, we've seen that trade receivables, nothing but debtors. Likewise, creditors are people who owe you money, you owe money to, where the company has to pay them in the future. So when you do credit purchase, you have to pay them. Okay, so you will pay money. Who's you here? The company. Then it will be shown under the liability sides as trade payables or creditors. Okay, now we will see the question. Okay, yeah, okay, this is under your textbook problem. Yes, we'll read and try to analyze, test yourself. Yeah. Okay. Mr. Sunrise started a business for buying and selling stationery with rupees 5 lakh. So 5 lakh as capital. Mr. Sunrise has started a business of buying and selling stationery. So, and try to understand the nature of business. So, he is into trading stationery items. Okay, he has used that as initial investment. So, of which he paid 1 lakh for furniture. Okay, so with 1 lakh he has bought furniture which is a long-term asset. Okay, and 2 lakh for buying stationery items. So, stationery item here is goods or stock in order to run the business. Then he employed a salesperson and clerk. At the end of the month, he paid 5,000 as their salaries. Okay, so he is employed 2 people, 5,000 as salary. Salary is a expense. Out of the stationery bought, he sold some stationery for 1,50,000 for cash. So when they mention for cash, it is called cash sales. Okay, and some other stationery for 1 lakh on credit basis to Mr. Ravi. So they have clearly mentioned as credit basis. So this is credit sales made to Mr. Ravi. Subsequently, he bought stationery items for 1,50,000 from Mr. Peace. So here it has not been mentioned for cash. Okay. So if it is for cash, they will clearly mention for cash. If it is not mentioned and if you see the vendor's name, then it is clear that it is a credit purchase made by Mr. Sunrise. Okay. So in the first week of the next month, there was a fire accident and he lost 30,000 worth stationery. A part of the machinery which cost 40,000 was sold for 45,000. Here he has made a gain. Remember, we saw gain of 5,000. Okay, now let's try to answer the questions. So what is the amount of capital with which Mr. Sunrise started the business? The first line we've seen here, 5 lakh. Okay, so that's the answer. Next comes, what is the fixed asset he bought? So the only asset he bought is furniture. So you can write furniture for 1 lakh. Okay. Third question. What is the value of goods purchased? He has made some purchases, right, to run his business. So here it is 2 lakh. So you can mention that. Since they have not mentioned any units as rupees or dollars, even I am not mentioning here. In case you find it in the problem, you have to mention in your answer. Okay. Next question number 4. Who is the creditor and state the amount payable to him? So who is the creditor here? He has bought, no, again, stationery items of 1 lakh from Mr. Peace. So he is the creditor. And how much he has to pay? 1,50,000 to the creditor. Fifth one, what are the expenses? The only expenses he made was he paid salary to the employees. So you can write 5,000 towards salary. Okay. Sixth one, what is the gain he earned? So the gain he made is while selling the machinery. So 5,000 he earned as gain. Okay. And then comes, what is the loss he incurred? He made a loss of 30,000 due to fire accident. So that you can mention. Then comes 8. Who is the debtor here? Debtor here is someone to whom you make credit sales. Okay, Mr. Ravi, and the sales amount is 1 lakh. So Mr. Ravi is the debtor and he has to pay rupees 1 lakh to Mr. Sunrise. Ninth one, what is the total amount of expenses and losses incurred? So expenses, we've seen salary 5,000 and the loss of 30,000. Okay, so it is 35,000 put together. Next one, determine the following are assets, liabilities, revenues, expenses, or none of these. So we have to category as see the following items will if it will come under assets or liabilities, revenue or expenditure. I have already given various columns. Now let's see. Sales. Sales means money is going to come in, it will come under revenue. Okay. And then debtors. Debtors are your current assets. So we will put under assets. Then your creditors are your current liabilities. You will put under liabilities. Then salary to manager is an expenditure. Okay. Then discount. Discount the company gives is also a expenditure. And then comes drawings by the owner. It will come under liabilities. You will subtract from your capital. Okay. With this, we have come to the end of the video. In case you have any doubts, please let me know in the comment section. The same video is also available with Tamil explanation and the link is given in the description. You can have a look at it. In case you like the video, please subscribe to the channel and share it with your friends. See you in the next video. Until bye-bye.